What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to give you a little update on on four sites that I had looked at before on here. Um, three of which I didn't ever put any money on. One I put money on and pulled it back out. So it's going to be Solomon's Lot, ARK7, Landa, and Bricksave. Um, my goal all along has been to continue to look at all the different options for fractional real estate investing, try to give you the best info I can on each. So I'm going to give you a little bit of an update on some of the info on those. Also, just tell you, I'm going to correct a couple things that people mentioned I got wrong on Solomon's Lot, and let you know that in I don't know, about 10 days, I'll be talking to the creator of this platform on my channel. So I'll put out a video. Hopefully, I'll be able to get a lot more details about what they're doing right now and what they intend to do. But if you remember this one, if not, check out the original video. But if you remember this one, what they're basically doing is allowing people that are going to sell their property to get some liquidity early. So, they can sell these investors on this platform a portion of their deal. They'll do it at a discounted rate. And then when they eventually sell, the investors will get paid off. Um, and I guess apparently it doesn't have to be when they sell, they can actually pay it off early. But one of the things that I had mentioned is, well, if the price goes down, you could lose money. I still think that it's not completely wrong. And I think if the price goes down far enough to where there wasn't enough equity to pay you, that you'd lose money, but the payout um, isn't determined by the sale price. So the payout is predetermined up front. So it's based on the appraisal that's done, and then they give you a discount to the appraisal. So on this one, the price would have to drop. It's very low leverage, so the price would have to drop really low to actually lose money, to where they didn't have enough to pay the small amount that they had borrowed. Here's the financials. But so if you remember, this is the same one I looked at before. Um, they had done, the interest being sold was 54,000. Um, but I think so. I think how it works is they paid this amount, and this is what they get paid back is really what it is, right? You end up getting, and maybe these two aren't the numbers, but what it is you get some discount to the appraisal. That's how you purchased it. When the property's sold, you get paid the full value of the appraised amount. So in one of the things I had pointed out, like this one is listed for sale, and it was already listed at the time for a price. Let's see if we can find, 421 Shelby. It was already at a price that was below this. Um, Here, let's do this. I'll show you. See if it's still up. Maybe it's not. Probably should have pulled this one up ahead of time, but I'm trying to. Yeah, okay, here we go. So, it was already cut to below that 240 for that 270, but it doesn't matter. When this does sell, they still will pay out to the investors as if it's, at that 270 price. So, I think theoretically you could still lose money if it sold for, say, 170, and then you didn't have enough equity in that sale to actually make that payoff. But then one of the comments that I saw said that this one has actually already paid the investors out. I don't know how I would figure that out by looking at the site, but again, I'm going to spend some time on Zoom with this owner of this platform, and obviously, they're new. These are the couple that they brought to the site, I think, from his own portfolio is what he mentioned. I believe, I'm not 100%, but I think that's what it said. But in any case, obviously, they're still moving forward on this, and so I'm going to talk to them. I'll be able to ask a bunch of questions, hopefully maybe understand it a little bit more. But I think the general premise of giving that liquidity prior to a sale is what's going on. Um, it's not completely clear to me why that's going to be easier than, say, giving an equity loan and then chopping that loan up. It's somewhat similar to what ground floor is doing, but as a second. Um, maybe fee wise this is less because they're not securitizing these aren't securities, so I'm not sure, but that's about the whole update I'm going to give you on this for now. I just wanted to clear those things up and then let you know that I will have hopefully a good question and answer session. I'm gonna ask him to jump on here with me, and maybe we'll dig into some properties, and one of them, and he can really explain to me what's going on. We'll see how that goes. It'll be the first time I've had someone else on my channel. um I don't know, you can let me know if it's something that you think makes sense or not. Really, I'm just trying to, shed light on all of the possible ways you can invest in real estate online and in a fractional way. I say that, and one of the things, I don't know if it's obvious, but I'm skipping the ones where you have to be an accredited investor because I just don't see the real benefit to that to the people that I think will use these, right? Like I said, my main goal is a lot of the potential clients that come to me prior to being able to buy investment properties, whole properties in real life. A lot of times they're like, well, I want to buy, what do I do with my money until then? And so I'm really looking for a site that's perfect fit for that. And typically those people are just not going to be accredited investors, right? If they are, they'd have the capital already, and we'd be off to the races, buying properties here in San Antonio or maybe somewhere else if that's what makes more sense for them. Anyway, that's it on Solomon's Lot. As far as ARK7, logged me out. Um, when I first looked at this, I really didn't like. I feel like their returns are just a little bit too low. I think I had looked at this property and maybe one other on a video. Um, they're just paying out a pretty low cash on cash return relative to some of the other sites, and I think it's because they have really high fees. I mean, it seems like they're having a tough time, at least in my mind, creating a really compelling um, rate of return. You are getting, like, it looks like they've paid out, excuse me, 4.48% in cash flow, and then in the setup that they have here, you do get a lot of the benefits of a longer term hold. You can probably tell even when I'm talking about these, I'm always mentally comparing it to Lofty because that's the site when that I've spent the most time on. If you've watched many of my videos, you can see that there's um, that's the one that I see having the best opportunity. And so you can get much higher yields on that platform, but you don't get a lot of the, long-term benefits of leverage on there. And so it is a trade-off, but I think when I've dug into these, I just haven't seen that the deals, are quite where I would want them to be for me to jump in on this platform. And so I've been really looking, keeping track of the marketplace, because this is where on Lofty that I think the deals are. It's not the ones that come to the platform initially. It's the ones that are being traded on the secondary market. After somebody's initially brought them on. Like once you get a discount, and when you first look at these, it looks like, oh, some of these are real big discounts, right? Because a lot of them sell for $100 per share. Then some of them sell for 20 or 30 or, but when you dig into each one of these, I didn't find any that are actually a real discount, at least to their initial price, because, okay, this one IPO'd at $20, right? So that when they did their initial one of that one, so, okay, so that's why that one's trading around 20. Well, okay, let's take a look at another one. This is trading at 104. Oh, it IPO'd at 100. So, they're moving a little bit, like, you've got a 4% move, but I haven't found any that are just very big discounts, like on Lofty, where I'm buying these $20 or $30 tokens that were originally sold for 50. Um, when that type of deal exists on another platform, it's hard to get excited about, if one of these is discounted 3 or 4%. Even if some of the real estate on here seem like superior deals, but so far from what I've looked at, it just hasn't really struck me that that's the case. So, I mentioned a lot of times that I'd come back to this one, because I think it does have promise. I think that having the secondary market, that ability for liquidity, and the ability to buy discounted shares from, once something goes wrong, but maybe from a really an irrational seller, which is what I think we have a lot of on Lofty. I think a lot of the people that I'm buying tokens from just don't really understand the value of what they have. Um, and that's partially the platform's fault, because they don't make it super clear. But it for me, it's just creating the most opportunity, which is why I'm there. Um, all of the ones on here seem to be paying out somewhere 4 or 5, maybe a little bit higher percent, in current cash flow. Um, a lot. I think they typically. Um, I was trying to see. I don't remember if they're showing us like the actual appreciation on these cash distribution. Yeah, oh yeah, here it is. The your property appreciation. And so if you add those together, and that's one of the things too is, on here, you might be capturing that appreciation a little bit better if they lever them. And honestly, I don't remember if they lever any of these or all of these or what they're doing. Um, I'm starting to get all the platforms mixed up, but thought that they did some, but maybe this is just for property that doesn't have it. Let me look at one other one, um, that I looked at earlier and see. Market cap. Oh, maybe not, right? Because they've got the full market cap there. Um, Historical returns, appreciation. Yeah, so maybe they're not actually using any debt on these ones. Um, so then, yeah, you're not getting a levered appreciation on these, and then that was another reason when you compare it to Lofty. Um, the other one I was thinking of is Landa, and this is one where they are using debt on the individual properties. The more, this one I wanted to give you a quick update on. So, in general, I'm still just not putting money into ARK7. Just because I'm not doing it doesn't mean it's not a good investment for you. You want to do your own due diligence. I think there's reasons that, a reasonable person could come to or conclude to the conclusion that it's a better platform for them than some of the ones that I put money on. Which reminds me, in the description below, I have links to all the platforms I'm currently invested on. Um, if you feel free to click on those, and also please like and subscribe. I typically forget to ask that until the end. So if you don't mind doing that, that would be awesome. Trying to, I found the more that I have grown the viewership on my channel, I've slowly had some people reach out to me. That's how I got to talk to the guy who runs Solomon's Lot. I've talked to the people on Lofty. I think connected with them through social media as well. Although I think actually before I started doing these videos, they reached out to my Twitter. But anyway, the more of you that I meet and talk to about these deals, it's really what I'm here for, because I want to know. I want to learn all the different options. I don't have any vested interest in anybody investing in any specific platform. And so, reach out and definitely talk to me if I get stuff wrong. I'm really happy to do a correction video. I'd love to have anybody else come on here, and talk about their product. Even if you have something really new, you only have a couple of properties on it. You can see I've invested on Mogul. Um, they don't have a ton of properties, but I think they're doing a great job from what I can tell so far. Again, always do your own due diligence. But so this is one Landa I put some money on. It was one of the first platforms I did. It took weeks for it actually to get on there. I couldn't, they were having some problem. I couldn't buy properties at the time. Uh, it went on for a little while, and I was told by a number of other people that that was happening. Most of the properties weren't showing that they were paying out any dividends. When I talked to a bunch of other investors on the platform, it just really seemed like, I'm okay with the properties not doing well, but if the properties aren't doing well and there was problems buying or selling and people weren't getting paid, like that's when I really started to get worried, and I just pulled my money right back off. One of the things that I thought was an interesting platform that they had was this lend platform, which was, it's basically investing in this fund that holds, I think at the time it only had 8 mortgages. It might have been 9, but that holds these mortgages. Um, I didn't love it compared to ground floor. I thought would be, for me, I'd get, even though the structure is much different, I think that for me, it seemed like the risk adjusted returns were better on ground floor for a lending product. And it looks like maybe that's true. Like they haven't, they obviously had a rough month in October. Um, yeah, dividends decreased by 46%. That seems really crazy, actually. So I don't know. It's showing interest rate of 7.9. They are lending to their own properties, I believe. And so when there's already, and they're all, in the same market, I just didn't find this very compelling, but I thought it was interesting to come back and look and be like, oh, it got even worse. Um, and I have, when I went back and looked at properties again to see, hey, have they changed? Does it seem like the trading's happening? It seems like there's still problems. Most of the properties I looked at still aren't showing any dividend. Um, it's possible it's just the properties that I've looked at, but I'm not, it's just, I just got really uncomfortable after that first round of putting money on and taking it back off that I just decided that until it seems like it's operating smoothly again, I'm not even going to give that one a try. And then the last one is Bricksave. One, I want to make sure it's clear. Um, I have a little bit of a, it's not a conflict of interest, but I want to make sure that I don't that I keep things confidential that I need to. One of my agents on my team actually is working with them. Um, I've talked to them before, and so I don't want to, I would never talk about deals that are under contract or anything like that. So for that reason, anytime anything comes up in San Antonio, may or may not be something that my team's working on, but it's ones that I wouldn't weigh in on because of that. And so um, I don't know. I think that and I had actually, this was back before we had anything with them, so I didn't mind sharing it. They had this other one in San Antonio. It was showing what to me is a pretty low rate of return. Um, so I think that's the one I looked at and decided to pass on. But the other thing too is for the San Antonio properties. I mean, these are the ones that I can just step out my door and buy on a regular basis. There's just no real reason for me to do those ones um, in this manner, right? But so then when I look at looking at the ones they have in other markets, the Cleveland and Chicago market. So this is the way they're calculating their yields. Their annual net rental yield or estimated annual net rental yield, and then sticking in the appreciation. I just don't know that I believe this appreciation number in Cleveland, Ohio. Now, one of the things, um, that I think that they're doing very well is really paying attention to markets specific data. Like, okay, yeah, maybe all of Cleveland isn't going to, but they might be taking a better look at the specific submarkets they're buying into. And so then, okay, if we get to 11.6, I don't know. Cleveland is just not a market that I love. It's not the type of area um, that I'd normally jump on. Um, And now I do own some. I think I own some through Lofty. Let me take a look. I always have those tabs up. I know I have some Ohio. I don't know if I actually have Cleveland. I do. Yeah, I have at least one in Cleveland. Oh, a couple in Cleveland. That's right. Um, these are not doing particularly well. This one we're actually trying to sell, but I have an extremely low basis in both of those, right? And so oh yeah, I actually have. Yeah, I shouldn't have forgotten about this other one too. They're ones that I don't have a ton of tokens in for the most part. I've mostly purchased when they're just cheap, but because I have access to these deals that are just extremely discounted, not performing well, which is a different thing, but it's hard for me to jump on and then buy this one, even though the big difference is so, and this is why I say just because I haven't put money on a certain platform doesn't mean that you shouldn't. For example, this is a company that is buying them and then running them, right? This isn't like they're crowdfunding. Some of them they'll sell the entire property, but some of them they're crowdfunding and then they're going to be involved on the back end in managing it, I believe. Um, Man, I have to go back. You'd have to go back and look at the first video I did on this or just take a look at their site. Actually, I think it's probably the quicker way to figure out exactly how they're being managed. But these aren't like marketplace properties like the lofty ones where people are just throwing them on there, and some of them are run into the ground. But because I have access to those ones, and then Chicago is the other market where I have just a bunch of properties already too. Um, so for me, this one isn't necessarily a problem with the platform itself. And I told you I have met a couple, or met or talked to some of the people um, that work here, and they strike me as being very professional. They're going about looking for properties in what I think is a methodical and an intelligent way. Um, the model where the San Antonio ones are just not compelling for me because I'm here and I own property here already. Um, and then, I mean, I don't know why Chicago and Cleveland are there other markets. I mean, um, so because these are ones, because those are just not markets that I want to hold in long term. Maybe they have some data that I don't, but when I look at Cleveland, Ohio, when I look at Chicago, from a demographics perspective, I just don't imagine myself owning there long term. San Antonio, I certainly do. I mean, it's a big part of the reason I'm in this market is because we moved here, in large part because it was a good real estate market that we thought we could, I could work in, really make this like our forever move because my kid was just about to start school for the first time. But so I think that's a great choice for a market. I don't see how you get to how Cleveland and Chicago get there with the same thought process. But again, I mean, maybe they have more granular data on the specific neighborhoods, and so because I don't think, even though both of those are, I think Chicago is shrinking too. I know Cleveland is, but let's take a look. Pretty sure. Um, I always like to just check the markets. And I do own a couple there, but they're ones that I've owned. I bought just due to the steep discount, right? And yeah, I mean, okay, so there was a little bit of growth, but I mean, this is just not the type of trend where you shrink, grow, shrink, right? This doesn't make me very excited. Now, I'm sure that there are certain zip codes that you could dive deep into and be like, no, this zip code's just grown every year. And that's probably the case and maybe what they're doing. But I really just like the tailwind of a strong growing market. So that's Chicago. Let me show you Cleveland. When I'm saying like I just don't, and then we'll look at San Antonio. I know we've looked at it before too. I think we looked at Cleveland on here before too. But I'm sure you haven't watched every single video I've done. So this is fun stuff, right? This is what we're here for. Um, so when we look at the Cleveland market, yeah, I mean, it's really hard for me to want to buy a residential property in a market that's shrinking this fast, right? And so for that reason, I'm not super excited about that. Let's look at San Antonio, right? And this is what in my mind I'm always comparing markets to, right? Is all the big Texas markets, but San Antonio specifically because this is where I live and work and sell investment properties on a daily basis. And okay, that's what I like to see, right? You see census data like that, um, and I'm a lot more excited. I understand how, in the long run, real estate here should go up because of the demand side. Now, the difference though is, and you'll notice, that looks like a brand new home. This one looked like a brand new home. but these are all existing homes. And so the difference is, the supply side is a lot more constrained in the older markets. Um, right? I mean, we're just building homes like crazy here. So, people take that into account, right? Like, okay, you're growing really fast, so your demand is growing really fast, but your supply is also growing. At least based on, everything I've looked at, I think that, there's still an imbalance there. It doesn't seem like we grow fast enough, that we build homes fast enough to keep up with the demand. Um, and just having that long-term demand just makes me feel a lot better about the market overall. But so yeah, that's really just what's kept me off of here. That, and they just only ever have three properties at a time. And so like when I come up, or maybe there might have been one time they had four or five. But when I look on here, I mean, that's what's really going to make me pull the trigger on one, right? Is I see a property that I'm like, oh, that's actually compelling. I'll jump in there and buy it. And I think too, uh, you can do it for as little as $1,000 per property. So that's not a huge deal. Um, I really have gotten addicted to being able to, you know, buy 20, 40, $20 worth of property at a time. It is just, I don't know, it's a lot of fun. It makes it so some people are selling ones for significantly cheaper. And then, obviously you slowly accumulate these bigger positions. But that's me, right? Who's spending a lot of time looking into this stuff, doing this. If you're someone who's looking to just put bigger chunks of money into a property and you want ones that are picked out by a professional, um, I could see how this could be appealing. And that's sort of the same business model as what Mogul's doing. I was much more attracted to the properties that Mogul, had on there, when I first looked on there, and so it's, I stuck money into that first one. But then, the other two were just kind of okay, and I didn't, move forward on the next two. I have a little bit, I think, on the second one I looked at on there, but so part of it is looking for the right platform, but then also, I have to believe in have to be excited about the property itself, and I don't know, I just couldn't get, I didn't want to jump into this one. Um, It doesn't mean that it's, and this is one of the interesting things to me is they're looking for shorter term holds. I don't know why I couldn't log in today. I'm pretty sure I had set one up, but I'm gonna have to go back and do that again. But yeah, so I think maybe I will eventually put some money on this one if something. Well, I will if something comes up that that I'm like, oh, I'm interested in that property. And when I do, I'll do an analysis of the property, just like I've been doing on everything else. Um, but just so far, for the reasons I mentioned, I just haven't jumped into that. So that's really all I wanted to do. Give you an update on those four sites that I had looked at before, but give you a little bit more information. Um, like I said, I mean, stuff is changing all the time. This is a really new industry. And so there's going to be new platforms. There's going to be more platforms that fail. There's going to be platforms that change their business model. One of the things I didn't know about Lofty is they actually started off as a service where they were selling you data basically. And then they pivoted into this marketplace, which is what they are now, where they're letting people list and sell on there. I didn't realize that at all, that they were initially a data company, helping investors find certain neighborhoods that they thought were going to do, exceptionally well. So, I think obviously any of them can change your business plan. I'm gonna have a ton of questions for this guy because I am, when I talked about this one before, Solomon's Lot, I think it's a really different strategy than you expect when you think I'm going to invest in real estate online. So I want to figure out how they came across that. If you have questions for this guy, send them to me ahead of time, and I'll try to ask them. I don't know how long we're going to talk for. I don't know. I know he wants to clarify some things, and I'm more than happy to do that. And also just really want to hear more about, um, what the plans are for the future for it. I think, the more options we have as investors to use different platforms, the better. One of the things that I'd love to see, especially with all the different platforms ones is if there were, um, I guess it makes sense to have sort of a market standard, right, where you could potentially move. Well, I guess maybe you can't do that. I don't know. I was thinking about being able to, buy on multiple platforms without having to have like right now. I already have, a ground floor account, a mogul account, a lofty account. I had money on Landa. Like I don't want to have a million different accounts, but I want to have access to all those different properties. Um, it would be awesome if they came up with a standard in a way that, their aftermarket properties you could buy any of them. I'm sure from a regulatory perspective, that's probably tough. And then a lot of them are using blockchain and using different ones, like Lofty's on Algorand. I think I saw that Solomon's Lot's on Chia or something like that. And then Mogul, I know, is on a blockchain, but they don't really even make that very public. They're not really like, very forward about that. So I don't know which one they're on either. Um, so I don't know. I guess that creates technical problems. So that's probably me just wishful thinking. But I think, the more options we have, I think the competition, and I think that, they're definitely stealing from each other over time as far as ideas. If I see like, if I see something I really like in the way that ARK7 presents something, I'm always telling the guys at Lofty, hey, you should change this or you should change that. Because I want to see this info and they give it to me on that platform. Why can't you give it? You guys are selling basically the same thing. Why can't you give that same info? Um, okay, now I'm really done. I know I always tell you I'm done, and then I talk another 2 minutes, and then I say, okay, let's wrap it up, and then you get more of this, and I'm sorry about that. I'm blaming it on being sick still, but I know I'm just rambling in general. So until next time, I will keep making mistakes so that you don't have to.